Hello, everyone. Welcome to the weekly roundup. Happy New Month. I'm Eva. Hi, Ben.
Hello, how are you?
Good. And you?
I'm doing great.
Rainy day.
It yeah, has been. Yesterday I
Ah,
thought it was so dark. Yesterday afternoon it was unbelievable. Another rainy day today.
almost like another eclipse.
That's what it felt like for sure.
Great. It was an interesting week. Bank of Canada finally cut rates. I think the market was expecting that.
Yes.
Um, Anything outside of that catch your eye this week?
Yeah, I'd say that was probably the biggest announcement that came out this week from that perspective. Initial reaction was the Canadian dollar didn't really not too much. But today we saw a little bit of the opposite of that, where Canadian dollar was quite weak. Down here 0.6%, and gold was down pretty hard today based on the jobs data. So we'll talk a bit more jobs when I go through the presentation there. The other
Okay.
announcement was ECB. So ECB cut rates 25 basis points as well. But everybody, at least everyone I talked to here in Canada, was most excited to talk about what was going on in rates. So psychologically, really good start from that perspective.
Awesome. Did you make any changes in the portfolios this week?
No, so not really. Continue to tinker a little bit with some of the holdings. Over the years, as we've made adjustments, sometimes there's been some smaller positions in portfolios. So I've been looking at cleaning
Yeah.
up some of those and adding to existing ones. But from a big picture adjustments, no, not too much. Continue to look at really where I think some potential opportunities could be. But it's more a wait and watch, build the entry points, and look for those. But so not a lot of changes. Quite weak from a trading perspective.
Okay. Let's circle back to the macros. Anything else you want to tell us?
Yeah, so when in the charts there, I'll show you Hedgeye updated their quarterly numbers just from the perspective of what they see with growth and inflation. So we'll delve into it a little bit there.
Okay.
But from a big picture perspective, really not too much has changed as the data continues to come out. Like we had the jobs numbers this morning in both Canada and the US. And was I put in the daily, they revised last month lower. So unemployment went up in both Canada and the US. And then they had a beat this month, which will probably be revised lower again next month. But that'll be too late. So the theme has been, unemployment is rising, inflation is a bit hotter than expected in both North America and Europe. And so we have this kind of stagflationary environment, which is, growth is teetering down and inflation just doesn't want to drop yet. And so that environment is true stagflation, which I've never seen in my career, but that's kind of the environment we're in.
Interesting times. Let's
Indeed.
delve right into the charts.
All right. Oh, that sounds
Yep.
good.
Okay.
Okay. All right. I'm just gonna pop them up there. Just let me know when you can see them.
Yep. I can
All
see them.
set? Yeah. Okay, perfect.
Good to go.
Excellent, thanks. Yeah, so lots of charts to look at and lots of data to review around deployment. But, I think both in Canada and the US, if you look at this, like this was a great chart, I think, just from the perspective of what the jobs numbers are telling you below the surface. Because the headline numbers, if you scroll through FinTwit and some of the other financial areas that you may look at information is headline numbers look good, but then you look below the surface and in the US, something in the neighborhood of 1.4, 1.5 million full-time jobs have been lost in the last year, yet their unemployment number has stayed pretty sticky at 4.1% plus or minus. So the quality of the jobs have dropped dramatically in the US. and as have they in Canada. So if we look at the Canada perspective, this is a chart that shows involuntary part-timers. So this is people that are starting to have to get part-time jobs because full-times aren't available. And so when you look at the 27,000 jobs created in Canada, we'll say that's the number that they used anyways. All of those were part-time job increases. Actually, full-time jobs were lost last month. So that you're seeing this part-time starting to pick up and you're seeing full-time down. The other metric that you look at is self-employed versus employment jobs. So again, self-employed jobs were a big part of where people added jobs last month in Canada. So from a quality perspective, that's not great. And so we saw the Bank of Canada, as you mentioned, cut rates. Perfect. That's what they should be doing at this point. In fact, I'd argue that they look like they might be doing it a little bit ahead of what the data is saying at this point. So, so it's a positive. They cut rates, and we'll see what happens as more data comes out. But I thought this was a great chart just to show around involuntary part-timers. So the quality of the job market has continued to deteriorate in both Canada and the US. So these are the charts as we've looked at this before. These are the quads. So quad one is growth accelerating and inflation decelerating. So we had some of that over the past couple of quarters. So these are last year. So this is looking backwards data. Quad two, which would be growth accelerating and inflation accelerating. So we've had some of that, and we've been riding this line quite a bit, and we'll talk about that. Quad three, which is the stagflation that I mentioned on the outset, which is growth is decelerating, inflation's accelerating. And it's really the rate of change of those numbers that matter. And then the final one is growth is decelerating, inflation decelerating. And so these are the bear market type events where we see something dramatic happen to the downside. So I don't anticipate that. It's certainly always a risk given some kind of event, credit event, something like that. But if we assume what the data is showing us today, we'd look up here in the top right-hand corner, which is the growth numbers in the United States. So this would be Q4, and Q3, sorry, Q2, Q3, Q4, and then Q1 of next year. So we're seeing a deterioration, so growth decelerating. And then if we look at the CPI, which is headline CPI, so this is year over year numbers. So every time 1 month from the previous year falls off, a new one comes in. And so you see inflation accelerating, not dramatically, not anything like we've seen before, but the rate of change of those two numbers probably keep us in this dynamic plus or minus for the next 12 months, the next couple of quarters. So certainly comes into my thinking when I think, what do we do and what do we do when the market reacts? And so we see a bit of a market reaction today where gold corrects and a number of equity markets finished down, US dollars up. Okay, so is there something changed, or are we just having a bit of a reaction to the jobs numbers? This data says that it's just a short-term reaction, so potentially an opportunity based on how we look at it. Two more quick ones. This is the same data, but just to show you on a month-by-month basis. And it's really just to give you a sense of the difficulty and a bit of the choppiness of the numbers that we've got since we've come out of COVID. You know, coming out of COVID, the previous 5 years have been quite stable. Data was quite stable. We didn't have to worry about a lot of variables. But since we've come out of there, the volatility of all economic numbers have increased dramatically. And so when we look at it here on a month-by-month basis, you know, certainly we don't aim to trade this way, but these are important things to look at and say, okay, if we're going to be in these two periods, which is we'll say quad three and quad two over the next 12 months, what kind of assets do we want to own in that backdrop? And so there is a lot of overlap around things you want to own through this period of time. And so it gives you a bit of thinking around what we should do, how we should do it. If the market reacts negatively, is that an opportunity to add something that can do well over this sustained period of time? So this is how we're thinking about what's going on for the next 12 months. And finally, the last one is just on what's ahead, because I know certainly we'll have that conversation, Eva, once I jump out of these charts here. But just from an economic perspective, what's ahead next week, that this is a good way to look at it. But the Federal Reserve has a policy announcement meeting on Wednesday. So that's at 2 o'clock. Right now, it's priced in at effectively a 1% chance of a cut. So I'd be shocked if there was anything that happens between now and then. So likely expect rates to stay plus or minus where they are in the United States, at least for this period. And if we look around the world, again, there's still other numbers to come in different pockets of the world. But I'd say the big number that people will be paying attention to would certainly be what's happening in the US.
Great insights. Anything else on the agenda for this week aside the charts?
I'd say not too much. I mean, one of the areas that we've talked about on and off is just about the access for companies coming to market, raising capital. So this we started to see a pickup in May, middle of May, where a bunch of companies came to market, raised money, and then to start June, it's been quite quiet. There's one so far that we've seen. The provinces continue to raise capital, where we've seen the province of Quebec raise money a few times in bond issuance. So the market's still functioning, but I'm a little surprised that we haven't seen more of the energy materials mining companies come to market and raise right now. So that's a bit of a sense of people aren't feeling super confident. But it's been a while since we've seen any big deals or issues come to market that we'd be interested in.
Just on the side, lots of clients have been asking, what should they focus on right now? There's a lot of news in the headlines. What should be their primary focus? Just one or two things.
Yeah, so it's a great question, and I think that it's the one thing that people say, well, what should I watch? And
Right.
I would say that, I mean, the areas that I think are important at least to watch from a market perspective would be the 10-year bond in both Canada and the US. And so those would be reasonable gauges for what's going to happen to equities as well. So, if we look at the 10-year US bond today, we're showing a 4.43%. And so just about 4 weeks ago, that was starting to get up towards 5. And so as we started to approach that 5 level, then you saw the equity markets come under pressure. Now we've come back down here. Those bonds have rallied a little bit. Equity markets are a little bit more stable. So I'd say both in Canada and the US, watching the movement of that 10-year, both Government of Canada and US, is certainly a good place to gauge, how much kind of risk or confidence people are feeling in the market. So that'd be an area that I'd look at when you're getting a sense of what's going on. And certainly it has a big impact in obviously bonds, but also on equity prices. So I'd say that'd probably be the one thing that I'd watch.
Okay. Fair enough. Any parting shots? Anything else?
Well, we have a few meetings, clients lined up for next week. I know you've been reaching out to people just to check in and book reviews. So if anyone needs something, certainly they can reach out to you and we can go through that.
Absolutely.
Yeah. We're getting into the end of second quarter here as well, so we'll start to be preparing the quarterly reports. But certainly, if you need anything, reach out to us and we can book some time and go through reviews.
Awesome. Great one.
Excellent.
Okay. I think that's it.
I think that's it as well. I hope you have a great weekend.
You too. Have a good
Thanks.
weekend, everyone. Bye-bye.
All right. Take care. Bye.